Okay, to continue, we have our iron condor set up, and we have a standard deviation cap. We have one standard deviation, and we have our iron condor capturing that one standard deviation. So if you see here that this is the current price, and at the expiration date of 12/15, we have a 54% chance that the price will end up here on this side, and we have a 44.5% chance that the price will end up on this side. So we cover our iron condor is covering the whole body probability chance, the probability range of 68.7. The higher you go, the more you increase your range. Now keep in mind, 100% means the whole historical numbers, which is not practical. But you can do it like 95. Some people do 95, um, like Karen Boutron, the super trader. She does a 95, which is two standard deviations. She buys, if you notice the profit on 10 contracts, 280 minus 7, she buys a lot. Actually, I haven't changed this. If I change if I change my strike prices to capture this probability, then these prices will change. I didn't change it, so they're still the same. Actually, it will be lower. If I move these out, they will be lower. Here, let me move it out to show you the capture. Let's do a 93.92 on the put side. There, got the capture. See the price go down 180, but you can lose more too. It's all the way past 1,000. So let me put that back. Let's just give you an idea what happens when you increase your standard deviation. This is what happens when you get the numbers skewed. I gotta switch them back. There we go. Now we got our iron condor return. And let's bring this back down to 68. One standard deviation. Now we're almost ready to execute this trade, except for I like to look at the historical representation of the price charts. So we go to your chart tab, and this chart is showing. I have it set up for 1 year daily. You can choose this, and there should be different time frames in here. And you want to start 1 year daily, and this is the current price. And I set my graph up to give it me a little bit buffer outside, extra space to play around with for notes or whatnot. So this is the current price right here, and each price right here represents 1 day. All these represents 1 day for the whole past year. So we can look at our strike prices and see how it lines up here. So if we look at all the stock prices, we notice that the majority of them are up in this range. If we circle the majority of them together, conglomerate in this range. So if we want to capture that range in our iron condor, because this is where most of the price has been for the whole year, we can do that. If you notice how these stocks right here, 1, 2, 3, 4, seem to like bounce off of something, you can set a trend line. Basically, this is called a support, which means the stock would not go past this. It created support. So we can set our iron condor to capture that as well. It only went past that support right here, which was in August. It was only for 1 day, and it came back and started playing ball again. So we can set our support up, and this is on the 99 100 side. And if you look at our condor, go back to the analyze, we have that captured. So we're good there. Now we go back to the chart. We look at the highest support bounce, and actually it started right here. If you look at most of them right here, that was the resistance. That means it wouldn't go higher than that, and that was 111. It broke it right here and went up 1, 2, 3, 4, 5 days, and it came back down about a week. It came back down and stayed within ball with the rest of them. So we can capture that as well. And the highest was 114. And if we want to look at ours to see where we're at, we capture that. We're at 116, 115. So having this probability range is really good buffer for us, especially when you're starting to learn. Remember, this is the current price, and and, and this price is going to change daily. It could go all the way up here, it could go all the way down here, and we want to make sure that we set this up to capture that movement. So this is right now set up pretty good to capture that movement, and this confirms it for us that our strike prices are pretty solid strike prices, pretty solid. So it's going to capture that movement back and forth, up and down on a daily basis. And remember, you can cash out. You don't have to wait till December 15th. You can cash out at any time. Now, if you notice here, I got some other indicators that help me decide where the stock is going and what it's doing. And I have something called stochastic full and MACD. And these two lines in here are moving averages. This is a 50-day moving average, and this is a 10-day moving average. And I'm going to show you something. This costs a lot of money to learn. I can show you what to read when the stock is going to pop up, when it's going to take off, and I can show you where the stock is going to land when it's going to go down. And the first way to read it is to go to the stochastic side, and you see this right here. You look at the stochastic, and you were looking for the blue over red, and you're looking for an angle of, like if you're looking at a clock, 1 or 2, pointing at the 1 or 2, which is a signal that, hey, this stock is about to pop off. But it's just a warning, and we need the MAC to confirm it as well. So if we look at the MAC, it kind of confirms it a little bit. It has the same, you want the same angle, 1 or 2, and in a big gap. It means the blue and red, or right in this case, yeah, the blue and red are coming up with the same angle. So see the blue and red here, and the blue and red here. So that's a confirmation that this stock is about to pop. And the third indicator to confirm is the blue crossing over the red here. So we got, this is the early trigger, 1, the second trigger, 2, the third trigger, 3. And the first price outside the blue line right here, see that first price right here, you jump in the stock, you buy it. If we got in here, we'd have bought it at 104, and we get out when it crosses. When go back to your the way to get out is to notice the cross going down right here. We got a cross going down here, and that's like an early warning signal. Get ready to get out. You can get out at that point, or you can wait till this shows a cross going down in the MAC, and that's a good indicator to get out. And you would got out probably 107. So we got in 104. That's a $3 capture. Just to show you how the power of these indicators work. Keep that in mind. You want to research and learn a bit about the stochastic. Remember, I set mine at 12, 3, and 3, and my MAC is default. I don't change anything. And I add a 50-day, 10-day moving average. And with this platform, you go to studies, and you hit edit studies, and you search for it, and you add it, like a MAC. And what you're going to add here is going to be this one and the 2 lines. And then for the stochastic, you're going to add the stochastic full, which is this one right here. And you change it to 12, and I think default is already 3 for you. And the next one is you're going to do is a simple moving average. So these right here show you the moving averages, 2 line. Actually, mine's set up a 10 and 30 day. Correct that, 10 and 30. Here's my MAC, and this is MAC 2 line. One of these gives you the histogram, the green and red, and the stochastic. So this histogram shows you the power. This green shows you the power of the movement. The bright green means big movement, and then the movement starts slowing down. That gives you an idea of where the stocks are going, where people are putting their stocks on, either going down or going up. So this is good indicators you want to read up on and learn how to read them. Keep in mind, blue over red, and an angle goes up on both of these.